guys, back with another video. So this one is going to be a short one. I'm gonna show you this short clip right here towards the end of the interview, and it's gonna summarize what I feel about GameStop currently. Now before I show you this one, I'm gonna implore people who hate on GameStop, hi, where are you? To kind of like focus on GameStop based on the fundamental, right? I know like people who analyze this stock, just one particular person, have given it a $6 value, but to me that is way undervalued. Even at this price point, it's still undervalued in my opinion. Okay, now the reason being is that when I look into these metric, I just feel like it's very cheap to me, right? Now, if you believe that it's overvalued, I implore you to look into these metric, whatever you see here, to learn about it, to investigate yourself, right? Because it's important to know what the truth is, because you live and die by the truth. So you better make sure that the truth is actually true. So when the media are telling you what to believe about this company, you better question it a little bit at the very least, right? Now, if you trust the media and you want to believe what the media is telling you about this company, then go ahead, short the company. If you learn how to short the company, go ahead, short it. But just make sure you know what you're doing. And this is the show that I like to watch. Listen to. But anyway, let me kind of play this one, and I'll come back to it.
I think this is going to work out for us. It's going to work out. Holding a long position has no cost associated with it. Eights have time. Ryan Cohen, Larry Chang, Alan, they have a plan. Right? Chewy's awesome. GameStop is awesome.
He's so
it's
confident.
a video game store.
Yeah.
How cool. This is the best MMORPG ever. We are so fucking lucky to play the coolest game with the coolest people at the best time in life. Like, come on, boys and girls. This is awesome. We are living. When you work in professional trading offices, people will talk about living the trade. You need to be so in it and so invested and watching everything that you know what's going to happen before it happens. We are all living the trade, you guys. We are living this to the best, and I think everyone does actually understand how important this is. It may feel like it's a dismal road because prices come down a lot. As a long investor, hallelujah. It makes me, I don't like seeing my account dollar value down, but I love that I can build a huge position because my goal is to own a significant portion of this business. And every share we buy, we get a big cut of the assets. And that's what value investors, fundamental investors, if you want to do a legit analysis of GameStop as a business, when you buy one share, you get a lot of cash and you get a lot of asset and not much liability. And there's deferred taxes on the book that they can take advantage of. I was just working on questions related to inventory. GameStop beefed up on inventory last year, and they showed spending on that end, but they haven't expensed it yet because it expenses when they sell it. So they've got deferred tax benefit going into next year too that people aren't thinking about. There is a clear pathway to profitability for this business, and that should be I would be very worried if I had a short position against GameStop. And I've met people that are like, you guys are so dumb. I've been making money since it dropped from 25. And I'm like, have you closed your position? And they're like, no, I'm riding it to zero. And I'm like, well, then you haven't actually made any money. And I haven't actually lost any money. So you have to pay interest. And my company makes money, like $5 billion worth of it every single year. So I'm cool.
What about if we're about to go full circle? Back to because that was the prevailing sentiment at the beginning from the hedge fund guys. They were like, oh, you guys are anyone buying this stock is stupid. It's all a sell. It's going to zero. COVID and, video games are going out, their stores are going out of fashion. They're done, digitization, everything. And are we about to come full circle on this to where the hedge funds start shorting it again? Maybe. Anyway.
They have been.
Well, yeah. I mean, what's the short interest? Like 28% at the minute, or at least the reported short interest.
If you watch daily transactions and a particular institution no longer publishes this number, you need to buy it. Lots of the good data you have to pay for. That's why Irvin Finance, the terminal that Dave and Alex have been building, we're all very excited about that because data is very expensive. So the idea that amateurs, us, can buy and get access to the good data through a collaborative, structure, that's really cool. That's like super, super important because spending $6,000, $30,000 a month on a particular data stream is a significant expense. And that's like quant funds, they have to spend that money to get that data so that they can process it, especially HFT firms. All right, what was your question again? Sorry.
No, I didn't have a question. It was just saying I think we're about to come full circle. Anyway, Scott, I feel.
So yeah, there's a lot to unpack there. Of course, he touched on the fact that we're in the best trade of our lives, right? And I truly feel that because again, like being able to determine what happened before it happened is exciting, right? Now I might jump in a little bit too early for me, right? But I don't regret that. Buying it at what at the time, $40 a share or even a little bit higher, and then coming down as it comes down, you get to add at this price point too. So it's not a big deal to me because I could accumulate more at the very low price here, and so my cost average going to be a lot lower than my previous purchase at $40, right? But so living the trade, he mentioned the fact that you should live your trade, right? You know exactly what this company is doing, how much money they bring in, every single year, every single quarter, every investigating what are they doing with all of the money that they got. The fact that they choose to invest in the company. You could see that on the balance sheets, and that's why it's so important to learn how to read the balance sheets so that you're not being fooled by these type of news coming along saying that, meme stock is not going to move, meme stock fad has finally washed out, stuff like that is going to deter you from the greatest investment of your life, right? And they do that for a reason. They do that so that you don't get to experience the growth of the company. And just like this gentleman was saying, every single share that you buy into GameStop, you're gonna get cash, and why do I say that? Well, there's so many other things that you have to understand when you buy into a company. And that, I always point out shareholder equity. This is the most important one, but people don't really realize it because they just focus on the net income. Yes, net income is also important because that's what is going to add on to shareholder equity, right? So the more money they make on the net income basis, retaining earnings, whatever this one right here, retaining earnings is also important as well. So the more they retain those earnings, it's going to get added back to shareholder equity. So these type of movement of assets from one part to another is important to understand, right? So that, when you see stuff like this, you don't get deterred. Because, what are they using this $250 million to do? What are they using this $300 million to do? So every single dollar of this company get utilized, in a different way. And I think Ryan Cohen, it's the leadership, Alan Adel, Larry Chang, these people already been demonstrated that they could do it, right? Now, can they replicate it? I don't know. That's remained to be seen, but I'm willing to invest in them because I believe in the leadership, because I believe in the company, because I believe in the industry itself, right? And so, now, if you don't believe in all of that, then of course, go ahead, short it. But just like this gentleman was saying, you have to pay interest on the short position. So go ahead. short it. If you have the ability to short it, don't close your position. Don't. And you'll see in the long term, when we post a positive quarter, they're going to say, oh, it's only 1 quarter of positive, right? They're going to try to find something to say about this company that will deter you from owning this company, even though they've been beating expectation left and right for 3 consecutive quarter already, especially on the earnings per share, right? Which is the most important metric as well. Earnings per share. Now, as far as the top line revenue, I think it's not as important because, you could also cut your way down so much that you're going to be infinitely more profitable just by cutting costs and utilize every single dollar to do wonder for the company in the future, right? And it's going to be a slow growth. I'm not going to say that it's going to be like hundreds of gazillions of dollars every quarter, but a sure growth. If you know that the company could grow 5% every quarter, rather than $100 million here, $100 million loss, $200 million gain, so the sporadic nature of growth, is not warranted, right? You don't want to see that sporadic growth. You want to see a consistent basis of growth in a company. It just makes you, stomach it a lot better, right? But anyway, so I hope it makes sense. But that was just a short clip, and that's all I have for this video. Thank you for watching. Okay, bye.